Amalgamation of Companies. In this video, we will be solving the April 2017 paper of Symbiosis College. So let's read the question first. Question number 3. The following are the balance sheets of Titan Limited and Vestar Limited as on 31st March 2016. Liabilities: share capital equity shares of rupees 10 each, 8% debentures, general reserve, profit and loss account, creditors, and bills payable. On the asset side, there is freehold premises, plant and machinery, furniture, stock, debtors, cash at bank, preliminary expenses, and profit and loss account. Titan Limited and Vestar Limited amalgamated as on 1st April 2016, and a new company, Western Limited, was formed with an authorized capital of Rs 40 lakhs. The amalgamation was followed on the following terms. Freehold premises of Titan Limited is accepted at book value and plant and machinery at Rs 6,20,000. The other assets, except cash, are taken over at 10% depreciation and agreed to pay Rs 46,000 as goodwill. It also agreed to take over creditors at Rs 90,000. The debentures of Titan Limited are to be discharged at a premium of 5% by issuing them 12% debentures of Western Limited as part payment of purchase consideration. The purchase consideration of Titan Limited was discharged by issuing 6,000 equity shares of Rs 100 each at Rs 120 each and the balance in cash. Western Limited took all the assets of Vestar Limited at book value except cash and also took the creditors. The purchase consideration was discharged by issuing 12,000 equity shares of Rs 100 each at Rs 120 each and the balance in cash. Bills payable of both companies are paid in full by the respective companies. The cost of liquidation of Titan Limited was Rs 16,000 and that of Vestar Limited was Rs 18,000, which was paid by the respective companies. You are required to prepare necessary ledger accounts in the books of Titan Limited and Vestar Limited. Now we will start by preparing the purchase consideration statement. If you read point number C and D, purchase consideration is discharged by equity shares and balance in cash, which means the PC should be calculated by net asset method. So now solving purchase consideration. First of Titan Limited. We will start by taking the agreed value of assets. The first one, freehold premises. That is taken at 4 lakhs. Plant and machinery, 6,20,000. Goodwill is taken at 46,000. And the remaining assets at 10% depreciation. So furniture is 40,000. Will be reduced by 10%. That comes to 36,000. Stock is 1,40,000 minus 10%. That comes to 1,26,000. And finally debtors, 1,80,000 minus 10%. And that comes to 1,62,000. Total of the assets is 13,90,000. Deducting agreed value of liabilities, and the only liability taken over is creditors taken at 90,000. So therefore the purchase consideration, that will amount to 13 lakhs. Now, reading point number C, purchase consideration of Titan Limited was discharged by issuing 6,000 equity shares of Rs 100 at Rs 120 and the balance in cash. So this purchase consideration, the first part is discharged by equity shares, and that is 6,000 equity shares of Rs 100 but issued at Rs 120 each. So that comes to 7,20,000. Then reading point number B, the debentures of Titan Limited are discharged at a premium of 5% by issuing them 12% debentures of Western Limited as part payment of purchase consideration. So the purchase consideration is also given in 12% debentures. 12% debentures, and that is given at a premium of 5%. Right now, the debentures in the balance sheet are worth 2 lakhs. So 2 lakhs plus another 5% premium will be given. Total amount given to debentures is 2,10,000. And finally, the balance is given in cash, and the balance amount comes to rupees 3,70,000. So purchase consideration is discharged by 3 ways: one by equity shares, then by 12% debentures, and finally the balance in cash. Now we will calculate the purchase consideration of Vestar Limited. Purchase consideration of Vestar Limited. Agreed value of assets. Starting from the beginning, freehold premises, that is 8 lakhs. Plant and machinery is 4 lakhs. Furniture is 42,000. Stock 58,000. And debtors 3,30,000. Taking the total of the assets, that comes to 16,30,000. Less agreed value of liabilities, and the only liability here is creditors, which is 1,30,000. Therefore, total purchase consideration that comes to rupees 15 lakhs. Now for Vestar Limited, purchase consideration again is given partly by shares and balance in cash. Reading point number D, 12,000 equity shares of 100 each at 120 each were issued. So this 15 lakhs has been received in the form of equity shares. 12,000 shares of rupees 100 but issued at 120. That comes to rupees 14,40,000. And the balance amount in cash, that is rupees 60,000. So 15 lakhs received as 14,40,000 in equity shares and 60,000 in cash. Now we can proceed to close the books of accounts of Titan Limited and Vestar Limited. So firstly, we will close the books of Titan Limited. In the books of Titan Limited, the accounts to be drawn will be realization account, the new company, that is Western Limited account. Then you have shares, equity shares in Western Limited account, the cash account, 12% debentures in Western Limited account, 8% debentures account, and finally the equity shareholders account. And similar accounts will be prepared in the books of Vestar Limited also. Now starting from the beginning, step 1 will be to transfer all assets and liabilities to the realization account. So realization account debit side to sundry assets. Now we will be looking at the balance sheet and taking all the book values. So starting from the first one, there is freehold premises, that is 4 lakhs. Plant and machinery is 6 lakhs. Furniture 40,000. Stock 1,40,000. Debtors is 1,80,000. The next is cash at bank. So we will transfer that to the cash account as to balance brought down 30,000. And then we have preliminary expense and profit and loss account, which will go to equity shareholders account. On the debit side, to preliminary expenses, amount is 50,000, and to profit and loss account, 1,50,000. The asset side is over. Now on the liability, the first item is share capital. Equity shareholders account credit side by equity share capital account, 12 lakhs. 8% debentures will go to 8% debentures account as by balance brought down, that is 2 lakhs. General reserve will go to shareholders credit side by general reserve account, amount is 50,000. And creditors and bills payable, both the liabilities will go to realization account credit side as by sundry liabilities, creditors, the value is 1 lakh, and bills payable 40,000. The next step will be for purchase consideration due, and the entry is the new company, that is Western Limited account debit to realization account for PC due, and the purchase consideration amount was 13 lakhs. And the corresponding credit effect in realization account by Western Limited, PC due 13 lakhs. Now coming back to the adjustments. Point number A was done. Now what we have to do is receive the purchase consideration. So it is received in 3 ways. Firstly by equity shares, by debentures, and then by cash. So equity shares in Western Limited account debit side to Western Limited account, amount was 7,20,000. Then 12% debentures account debit to Western Limited account, amount was 2,10,000. And cash account debit to Western Limited account, the balance was 3,70,000. And the corresponding credit effects in Western Limited's account on the credit side by equity shares in Western Limited account, 7,20,000. By 12% debentures in Western Limited account, 2,10,000. And by cash account, 3,70,000. Point number A is done, point number B is done, and point number C also is done. Point number D belongs to Western Limited and Westar Limited. Point number E and F, bills payable was paid by the respective company and cost of liquidation also was paid. So both these entries we will pass now. Entry for paying off, come to realization account on the debit side to cash account for paying bills payable, amount is 40,000. And also liquidation expenses, that is 16,000. So the total expenditure is 56,000. And cash account credit side by realization account. For bills payable and liquidation expenses. Total amount was 56,000. That's it. All the adjustments have been done. Now we will close the accounts. Firstly, the 12% debentures in Western Limited will go to the debentures account by 8% debentures account, 2,10,000. Given to the 8% debentures to 12% debentures in Western Limited account, 2,10,000. Now, 8% debentures got to be paid 2 lakhs, but they have been paid extra 2,10,000. So the difference will go to realization account. By realization account, the difference, that is 10,000. And realization account debit side to 8% debentures account, the extra part, that is 10,000. Now we can close the realization account. The credit side is greater, total is 14,40,000. And the difference will go to equity shareholders account. And the difference amounts to rupees 14,000. So equity shareholders account credit side by realization account, 14,000. The next account is Western Limited account, and that has already tallied. Total is 13 lakhs. The next is equity shares in Western Limited, and that will be given to the shareholders by equity shareholders account. 7,20,000. Balance in cash account will be transferred to the shareholders by equity shareholders account. Total is 4 lakhs. And the difference, that is 3,44,000. %12 debentures account is closed, 8% debentures is also closed. The corresponding effect of shares and cash that will come here. 2 equity shares in Western Limited account, that was 7,20,000, and the balance in cash to cash account, that was 3,44,000. Finally, the equity shareholders account should tally. And the total of the equity shareholders account comes to 12,64,000. Now the same procedure to close the books of Vestar Limited, the next company. In the books of Vestar Limited, again the first step to transfer all the assets and liabilities to realization account, starting with the asset side to sundry assets, taking the balance sheet values. The first one is freehold premises. The value is 8 lakhs. Plant and machinery, that is 4 lakhs. Furniture is 42,000. Stock is 58,000. And debtors is 3,30,000. Then cash at bank. Cash is not taken out, so it will be transferred to the cash account. 22,000 will be written as to balance brought down. 22,000. And preliminary expense will go to the shareholders account, debit side, to preliminary expenses account. 28,000. Liability side, the first item is share capital. Equity shareholders account, credit side, by equity share capital account. That is 14 lakhs. The next general reserve, by general reserve account. There is 1,16,000. Profit and loss account is 20,000. And creditors and bills payable will go to the realization account. On the credit side, by sundry liabilities. Creditors 1,30,000. And bills payable is 14,000. The next step would be for purchase consideration due. Entry is Western Limited account debit to realization account. Purchase consideration was 15 lakhs. And corresponding effect in realization account by Western Limited account 15 lakhs. Now, for receiving the purchase consideration, it is received in two ways. One is by equity shares and the balance in cash. So, equity shares in Western Limited account debit side to Western Limited account 14,40,000, and cash account debit side to Western Limited account. The balance there is 60,000. And the corresponding effects in Western Limited account by equity shares in Western Limited account 14,40,000, and by cash account 60,000. Reading the adjustments, point number up to point number D, everything is done. Again, point number E and F for paying off bills payable and the cost of liquidation. Liquidation expense also will be paid. Entry will be realization account debit to cash account. Firstly, for paying bills payable, and the amount is 14,000, and liquidation expenses, that is rupees 18,000. Total expenditure is 32,000. So therefore, cash account credit side by realization account for paying off bills payable and liquidation expenses, the total was 32,000. That's it. All the entries and adjustments have been done. Let's close the books of accounts, starting with realization account. The total of the debit side here is greater. That is 16,62,000. and the difference will go to the shareholders by equity shareholders account. The difference is rupees 18,000. So therefore equity shareholders account debit side, the corresponding effect to realization account, amount was 18,000. Then the new company Western Limited account always tallies, total is 15 lakhs. The next is equity shares in Western Limited account. The shares will be given to the shareholders by equity shareholders account. 14,40,000. Transferring it to the shareholders to equity shares in Western Limited account. 14,40,000. And the next cash account, difference again will be transferred to the shareholders. Total is 82,000. So therefore by equity shareholders account, the difference is 50,000. So shareholders account debit side to cash account, 50,000. That's it. Equity shareholders account should now tally. And the total of the debit side and credit side is 15,36,000. 15,36,000. This was the solution for the April 2017 amalgamation question.